Congratulations to everyone who made it here. Thank you so much, everybody, for joining us. Although we're still waiting for a lot of registered participants to come on board, but it's 12:01 and we have to get started. If you can't hear me, please just type on the chat box and I would see it immediately. So I don't know if I should start now or I should just give extra 10 minutes. But people are busy, so I just have to start immediately. Okay, so I think, let me share the screen. I have to introduce myself. Okay. So my name is Lovet Chuku. I'm the co-founder of Mortgage Financial Services, and because of Mortgage Financial Services is actually a finance firm that offers accounting, financial management, portfolio management to small and medium scale businesses. And we've been in operation for 3 years plus, and we've also had our challenges. We've also had our winning times and our challenges, and we've had a lot of data servicing the small and medium scale businesses. All right, so everything I'm going to be sharing here is based on experience and knowledge as well. So I'm not just coming to read what I'm saying in the book. No, it's based on knowledge, what is happening in the industry. That's what I'm going to be sharing here. So basically, while we're running our company, we have clients who were just basic traders, basic buy and sell kind of business. That was what they were operating. We also have business owners who were into the finance, something financial technology, things that we were not really conversant with. So, it was now a challenge for the new fintech that was actually being birthed, like the cryptocurrencies, the digital assets. We didn't know how to account for that. We didn't know how to do that because it's not something that we're used to. It's something that was really new in the market. I had to actually go in search of the knowledge to say, okay, how do we handle this? We saw that as a major challenge and we decided, okay, we have to tackle this challenge. We have to know how to tackle it. We have to go for knowledge, seek knowledge. And that's what actually caused me to come studying MBA FinTech. I didn't just do general MBA. I had to really go into FinTech because most of our clients are actually pivoting to FinTech. And we need to understand what it was all about so that we can do accounting for them successfully. So what did we do? While in the course of getting knowledge for this industry, I had to see a lot of other things that was happening. So it was an interesting session. We had to meet people from different sectors of finance, doing big things, doing a lot of things. And I was like, wow, this is, in fact, we've not even seen anything yet. We've not seen anything yet. So it had to birth for this training because a lot of people don't even know what's happening and they're still aloof at the back. And, we are supposed to be moving along with the trend. We're supposed to be moving along with what is happening. So we're not always left behind. So that's what actually birthed for this training, for us to know what is happening in the finance sector. Where has it come from? Okay, where did it come from? What is happening now? How can we join? How can we participate? How can we have a stake in it? That's what this training is all about. Okay, evolution of the finance, what is currently happening, how are people taking advantage of it, and how do we have a stake in it? Okay, the things we're actually going to be talking about first is evolution of money exchange, because it's purely a finance webinar, but it's majorly practical. So we're going to be looking at evolution of money exchange, the challenges each dispensation brought, and the solution that came out of it. We're going to talk about the global reserve banks in the world, where it came from which country to which country, and where it is currently. We're going to talk about the top, what top firms are doing, how they're taking advantage of the current markets now, and then what we should do as individuals, as new companies that will be birthing for us. What are we supposed to do? Okay, so evolution of money. What is money actually? So you see, money itself, it doesn't have any value. It could be anything. It could be a shell. It could be an object. It could be a paper. It could be anything really. So money in itself, its value is symbolic. It's based on the functions that people place on it, based on the importance that people place on it, and it's based on the functions that it's actually serving. That's when you can say, okay, money is valuable. So it can, because it's when it functions as a unit of measurement, when it functions as a means of exchange, when it functions as a storehouse, it's a storehouse of wealth. That's when you can say, okay, money is actually valuable. But money in itself has no value. It could be anything really. So money now actually started, like say 40,000 years ago. It started from the barter system. Okay, so there was bartering, exchange of goods for goods or services for services. There was no central object that was used to exchange whatever we want, our wants and our needs. Okay, so it's when you have this particular goods, you have to exchange with another particular goods. And I think someone is not muted. Okay. Yeah, so that's what the bartering system was about. And this bartering system actually came to its own challenges. If you could see from this graph, you would see Nebraska has surplus of wheat. Nebraska has surplus of wheat, wants to buy potatoes, and he goes to meet someone who has surplus of potato, but the person wants to buy something else. The person doesn't want to buy the same wheat. The person wants to buy maybe oranges, right? But he has potatoes. So you have wheat and you want to buy potatoes. There's someone that has potatoes, wants to buy oranges, something else. So you now go to the person who has an orange. The person has oranges, but doesn't want to buy your potatoes, wants to buy wheat, wants to buy something else. So exchange of goods to goods was now actually a barrier. So everyone needed a particular unit of measurements that no matter what you have, no matter what I have, I can get what I want, I can get what you want, without it being that I have to give you exactly this particular good. So the world needed a unit of measurements that would be accepted globally for exchange of goods and services. And then, this was a really major challenge, and, it's birthed forth the new money, which was the gold money. Okay. So in life, you should see that life actually evolves. There's nothing that is static. If you go to the hospital, for instance, you would notice that it's life, like once it starts, like if it's a straight line, you would see that, what's it called? It's lifeless. When you're checking your heartbeat and a straight line, see that it's lifeless. So the reason to show you that life is actually in you or in anything, it's when it is evolving, okay? When it moves up and down. There will always be challenges, and then the challenges will bring forth solutions, and those solutions, bring forth new challenges, and then that's the way it is, from challenge to solutions to another challenge, and then to one, another solution comes out from there. So that shows you that you're actually living. That shows you that you're actually in this world, and we'll always seek for better ways to do things, because every dispensation needs better things to, better ways of doing things. All right. So that's how the money had to move from the barter system to the gold, because we needed a central object or money or anything that would be used as a means of exchange, because your need might be my own need. All right. We can be having the same wants, and we want something else. Okay. So we move to the gold. The gold itself, it also came with its own challenges. Gold is even heavy. Preserving this gold in its time, preserving it was expensive. You had to pay for security to secure the gold. I wish I had a picture where there's one I saw where a man is literally standing by the gates to protect house filled with gold. So protecting the gold itself was a high cost on its own, and this actually, it couldn't stabilize inflation, because it was really expensive to even print the gold. And then this gold also was very easy to counterfeit. Oh, it was very easy, super easy to counterfeit. If you already know that you go to the market and you want to buy this particular gold, you see so many kinds of gold, and you'll be wondering which one is real and which one is not. So it's also it imposed the high cost on the economy, because the cost of protecting this gold, printing the gold, everything was expensive. Everything was heavy. It wasn't even durable. It was very difficult to transport. To move this gold from one place to another was a big deal. So to move it from one place to another was a major big deal. So these challenges actually had to birth forth an easier solution for money. It had to birth forth an easier solution for money, and then it now birth for the metal coins, called like the metallic coins. So the metallic coins, it was actually founded in 600 before Christ, and then it is called mint, and the process of creating it is called minting. So you hear mint coins. Okay, so this coin was actually officially printed by King, what's his name again? Lydia King Aliat. Yes, Lydia King Aliat actually was the official person who printed these coins in the mass. It was officially used, and it made him really, really wealthy. It made him really, really wealthy. It was mixed up with silver and gold. Yeah, and then it came with its own challenges. I think UK was using more of the gold coin, while America was using more of the silver coin until, but the challenge is really hard was the determining the face value and the metal value, because once you're done, you want to reprint it, you don't know which value to use. How do you measure it? You measure the face value, or you measure the cost of the printing. So determining the value of both the face value and the printing value was really a challenge, just a little challenge, and people already, we need something more, we need something, that shows you that life, you always want something better at all times. So this actually now gave birth to it made, yes, the US finally now eliminated their own coin in 1962. Yeah, they finally just eliminated it, and then a new form of currency actually was birthed forth, and then this was now paper money. Yes, paper money, which today we call fiat currency. So this fiat currency was first founded by the Chinese. Yes, it was first developed in the 7th century, but it was officially used in the 11th century. And it was first developed in China, first by the Yang king or something there. So this paper note has been used for thousands of years. And the major challenge it had was it was easy to counterfeit it. Oh my God. Even till now, you can still counterfeit this. And imagine counterfeiting it at a very high, large range, and use it to buy goods and services. And imagine all the volume of money you have, they're all fake. You can imagine that. So the counterfeit thing was really, 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 really a major challenge. And then the global economy, everybody was now looking forward to a kind of money where there was high security. Everybody, we wanted money with high security. We're tired of the counterfeit. We are losing a lot. A lot of economies were losing because of this counterfeit thing. So they needed money that had some kind of security on it, and then it now had to birth forth. It had to birth for the card money. Yes, the card money. You could see, you see there are credit cards and there are debit cards. So this card money actually started in the mid-century, and the first plastic card, which is the credit card, was actually produced in the year 1950. But it's officially 1950. And in 1966, the debit card was actually also officially released, but they were not actually used. It only started being used in the 1990s. Acceptable, officially used by different, people in different countries in the world, especially United Kingdom. They embraced the card money in the 1990s. And in this same period, that was when this is the time too that, what's it called? The internet was actually at a top. It was actually top at that period of time. It was introduced into the market, and people were embracing it. And I think the early 2000s, we have the online shopping. You could buy stuff online, and the only way you could buy those stuff online was through the card. So you can't really pay for all whatever order you're making online with paper money. So let's not even look at the Nigerian part of it for now, because the world has moved on a long time ago. And the world has been using card money imagine 1990s. That was when it officially started being used. So you can't really buy anything online with paper money. You have to use card money, and it was secured. It had its own securities, and people really trusted it. So this actually also gave birth to new development, new technology was coming into the market. Companies are testing new things. Private companies are trying to do new things, and especially the what's it called? Especially the companies who are really into phones, who are really into calls. They decided, okay, if this card can be printed, that means you can do us. So they approached the NFCs, which is called near field communications, and asked if they can actually have their own payments as part of their services, just like you have an online store and people are always buying from you. They're paying with their various bank cards. If you have the capacity, like these global firms, they had the capacity, and we're like, we want people to be paying with our own payment platform. We don't want you to use Barclays Bank. We don't want you to use GTB Bank to pay for any of our products. We want you to use our own payment platform for you to pay for our product, because they had the capital, they've gotten so big. So, and then that was the near field communications. They had to start building payments models, payment platforms for those big companies. And then it now birthed for the electronic money. So this electronic money, it's highly used here. Since I came to UK here, like most of my friends, almost everybody pay using Apple Pay, Samsung Pay, which other pay? Google Pay, yeah. So I'm still using card to buy stuff in the supermarket, whereas my friends, they pay with Apple. We enter a taxi, they use Apple Pay, or as in like barcode, and then just pay and then leave. So I came to understand that here in the West here, people use mainly. So here I found out that people, especially the Gen Z generations, they have embraced electronic money. They've embraced it so much, and the population is really high. They would just want everything quick. They don't want to waste any time putting in cards. Once they just please tap in, even when there was option for you to slot in your card and put your your code, they don't want that. They just want everything to be done at the speed of light. So they prefer to just use the barcode because it's like in seconds, and then your item has been paid for, and then they're off. So new dispensations, new generation, birth forth new challenges, and the market has to adopt. So from the electronic money now, gradually, because of how these people are developing the new technology, new AI is coming up every minute to solve challenges of speed. Okay, speed, convenience, ease in finance, and then now birth forth the cryptocurrency. So you can see how it has come from barter to gold to metal coins to paper money to cards to electronic money. And now we are actually being in the dispensation of the cryptocurrency. So cryptocurrencies, it was founded first in 2009 by Satoshi Nako. What's his name? Satoshi Nakamoto. Yes, if I even got Nakamoto. Yeah. So it was founded in 2009, and this currency is actually decentralized, unlike the paper money, all these other monies that are actually centralized regulated by the central bank. All right, so the challenges with the central with the paper money, the fiat money, and the other monies that were centralized was that it was controlled by the government. You can't really get you can't really get so rich transacting with your money. No. Like if you want to go into forex, if you want to go into financial money transaction, you can't really get so wealthy because now it is regulated. You have the interest rates on the decentralized currencies are actually very high if you want to borrow. And also the challenges this fiat money also brought was, if you have a business and you're trying to access funds for your business, if you access loans, it is a very difficult thing. It was a very difficult thing to access loans. Like most of our clients who want to access funds and their accounting is very accurate, these companies have seen that this business can actually pay back. But for the fact that they were not big enough, they were of high risk. They were of high risk on its own. And assessing funds for small and medium scale businesses, these businesses are actually the highest employers of labor, because the global firms are like top 3%. And how many can they really employ? They cannot employ everyone. So there will always be small and medium scale businesses employing people in the grassroots to actually fund the economies. And if these people at the grassroots cannot access loans, they cannot access credit to run their businesses successfully, it will always be a challenge. It will always be a challenge because the traditional banks would always want to give money to the people they are very, very certain that they will get their money back, that they are like no risk to them. All right. So this was really a major challenge where the cryptocurrencies, when it was best for, they had different goals, different missions. Okay, maybe a particular coin is best for to fund a particular thing. So, okay, we want to fund this hospitality, we want to fund this business, we want to fund this business. Like instead of waiting for the traditional banks to finally listen to the SMEs, these crypto coins were now used. They had an agenda. Let's fund this spot. Let's fund this different missions, but it was actually to pay for something, or it could be for fun, or let's buy this game. Let's use it to fund it. Remember I said money has no value except the functions that people attach to it. It has no value. It could be paper, it could be anything. Tomorrow, the next money can be bottles. Okay, it could be bottles, it could be anything. So if there is no value, if there's no functions attached to it, it means nothing. So imagine money moving from digital card to crypto coins that you cannot even touch. It's all virtual. So you can imagine, our money is virtual, So as I said, it could be anything really. So this coin to now use now to pioneer different things that the traditional bank would never really do it. And the good thing that it's centralized, like the people's money, meaning that it's actually controlled by the demand and its supply. It's not by the government. Is no longer say, okay, the value of this coin is this. No, the value is not actually based on what the market value is actually based on supply and the demand of that particular coin. So that's what is determining the price. If there's so much demand on the particular coin, the particular cryptocurrencies, the value tops up, the value goes really high. And then if there is less demand and there's so much supply of it, the value drops. So the market actually determines the price, unlike the other currencies where it is determined by the government, the regulation, interest rates, and everything. And the beautiful thing about this cryptocurrency is that we are actually at its initial growth stage. The beautiful thing is, anything you actually enter at initial growth stage, you will you will make a lot of things out of it. You will make a lot of money out of it. You make a lot of progress out of it, because it will definitely go up and then get to the maturity stage where it pivots down. So I can say right now the fiat money has already is at its diminishing stage. That's why, you know, some countries still use fiat money. Like my home country, we still use a lot of cash, because the cash economy, they're still trying to embrace the what's it called, the card. They've not even gotten to electronic money. So some countries are still behind adopting to the various forms of money that are in existence. And some countries, like the first world countries, they are far ahead, they've embraced the fiat, they've embraced the fiat, they've embraced the card, they've embraced the electronic, and now they are on something else entirely. So where did I stop? So the cryptocurrency is actually, it's at its initial growth stage, being that if you're following cryptocurrency, if you're following Bitcoin. In fact, Bitcoin was first introduced into the market in 2009 by Satoshi, and if you're following it, the price has been going up. I think I have, let me see if I have a picture of it. I should do. Let me see if I have a picture of, okay. Want to see how, yeah, the historical chart. So you could see it started in 2009 when it was 0 to nothing. So imagine the value there was like $0.1 for 1 unit of Bitcoin. So imagine if, you know, when it was, you know, there was a time where people would be sending you links, or buy this coin free of charge. You know, like I was sent the link so many times. You know, my younger brother, he's really a tech person. He loves all this Bitcoin and everything. And we always tell him that he doesn't know what he's doing. He should concentrate on his architectural, you know, plans and his schoolwork. But Bitcoin, actually, there was a time it was $0.1. So if you were to buy 1,000 units of Bitcoin, then it would be, you will spend only $100 to buy 1,000 units, because it was $0.1 for one. So imagine you bought it for like just decided, okay, let me just spare my $100 to just buy this coin. Maybe someone has been disturbing you, please buy this, I think it's going to make sense. This is where the future is going. This is what we can use it to do. Or just focused on, okay, we want to use this coin to actually pioneer a mission or something. Okay, let's fund this hospital. Let's do something. Okay, we just need you to buy this coin. Just buy it. The price is just 0.1. You can buy it now. We would use this your money now that you used to buy this coin to do this particular thing we're trying to look to fund this hospital. All right. So that mission now, people now give you money. I decided, okay, I can spend $100 of my money to finance your course, and then you're giving, as you give the person who wanted to sell the Bitcoin $100, the person gives you 1,000 units of Bitcoin. I decided not to sell it. Okay, as at the time that's 2010, it was still like 0.1, because before 2010, when it was initially brought into the market, like 0.00001. Okay, so as of 2010, it was like 0.1. So this currency was still at the starting stage. And then when it got to 2017, 2018, it started to climb. The value, people started seeing it, okay, this could actually, you know, be exchanged for goods or services gradually. And you see the value started to go up. The value started to go up, because the more people demand for it, the value goes up. The less people demand for it, the value comes down. Less demand means maybe people are selling, they're like, I don't want, give me my money. I just want, you know, some people were hungry at a point, they're like, please, can you give me back my $100? I want to buy this. I want to do this. So they'll sell it. So the more people sell it, the value goes up, because it's determined by the demand and supply, the price. So when people are selling it, the price is going down. But when people are buying it, they're, oh, we want to buy this, I want to buy it, the prices goes up. So imagine your $100 I used to buy 1,000 units. It just keeps going up. You could see. And now in 2021, in 2020, it kept climbing. You could see the price. As at December 2020, when I found out Bitcoin was 38,000, no, 34. I think in the first week of January, it's pumped up to 38,000. for 1 unit. So you can imagine if you didn't sell the 100 units of Bitcoin you had then, okay, let me just, and then imagine how much you'd have been worth. So 38,000 times 100 units. That's, if you can do the math, 38,000 times 100. That's $3.8 million. And then it's climbed up from 38,000. It went up as at April. Yeah, the value was 65,000, not even the 63 that was here. As at April, the value of Bitcoin went up to like 65,000. And then I think it dropped again, making it now 63,000. All right. So you could see how right now we are at initial growth stage. An initial growth stage of anything that is going to become mainstream in the market, it's the best time to enter anything, because that is when you're going to profit from it, because the time will come to get to maturity stage, to get to the peak, when it's now centrally accepted. There will now be regulations, and if you can't even buy a number of cryptocurrencies because it's now regulated, because there'll be a lot of people who will be very rich, and it will bring up some challenges, and the government will want to control that, because the government always wants to be the major ones who have money, and some few individuals who are pumping money into the market. They don't want it to, when a lot of people have money, to them it's no longer interesting. It's always interesting when just few people have a lot of money. Yeah, it's interesting to them. So a time will come when to get to maturity stage that generally accepted. The way these other monies, you see the evolution where we've come from, the way the other monies were generally accepted. At that point, if you exchange your currency to another currency at that time, when it's at the maturity stage, it will be barely 0 to nothing. Or for instance, you buy, okay, let's say now you change your money from Naira to pounds let's say January last year. Before I came in, let's say the value of Naira to UK to pounds was it 600? No, 590. Yeah. And today it is 675. So the gap is not so much, because it's regulated, it is controlled. Right now it's regulated, so the gap of the currency is not so high. And that's because it's Nigeria, where I don't want to even talk about it. But if you use other countries that their economy is stable to an extent, the gap even from last year to this year will still be like barely almost the same thing. Okay, let's use dollar to pounds. The value, the change is always like 1 point, 2 points, 1.2 points, because the economy is strong, and there's a lot of control, there's a lot of check and balance, there's a lot of productivity in these countries as well. Okay, but unlike the cryptocurrencies, when if you assessed it initially and you entered it at the initial growth stage, you could see, imagine the percentage profit you would have from $100 in like 10 years or in like 11 years. The $100 becomes $63 million. Think about it. Your $100 becomes 60 million, because the $100 gave you 1,000 units of Bitcoin at inception, and right now that's $100 that gave you 1,000 units is now giving you 63.3 thousand. So imagine 63.3 thousand for 1 unit multiplied by 1,000 units that you got. That's like 63 million. Okay, this is just like $100. You just said, okay, let me just sponsor what my friend is asking me, and let him pay me with this coin. Okay, so that's how interesting the cryptocurrency is, and where we are at now. Where are we now? This is where we are now. We're at the initial growth stage. Okay, so now let's move forward. What are the companies doing? Okay, let me view. I need to make it a big screen. Okay. So now we have to see, okay, with everything I've explained, we now want to see where has the money actually moved from? Which country, the Global Reserve Bank of the world, they always have a Global Reserve Bank where all the countries actually sending their money for storage in case you want the money in the future. You can always have it because the place is safe, your economy is strong, and you saving your money just like a central bank. That's the way it is. But this one is for the world, okay, where different countries can send in their money and have their money secured and kept or used. This money can be borrowed out as bonds or debentures for for the countries to make profit on it. So we are going to talk about where it's moved from and where it is currently and where it's going. So it started in Portugal. Portugal was like the first global reserve bank of the world. It was there in Portugal for 80 years. It moved from 1450 to 1530. And then it moved from Portugal to Spain. It stayed in Spain for 111 years, started from 1530 to 1641. Then it moved to Netherlands. So Netherlands at a point, from 1642, it was the global reserve bank of the world. And it lasted there for 78 years. Then it moved to France. So France became the global reserve bank of the world in the year 1720, and it lasted for 95 years. And then it moved to UK. So, different dispensation, different powers, different economies, different, if there's a lot of inflation, if the country is actually losing a lot of money, countries to move their money and they go to the ones that have stronger economy, stronger everything. Okay, the economic indicators are very strong. Like the unemployment is very low, the inflation is very low, the value of the currency high, everything. So those are the indicators, those are the triggers that makes people, countries to decide to pump in their money into that economy. Okay, and the economy eventually becomes the global reserve bank of the world. All right, so he moved to France and he stayed there for 95 years, started 1720. Then he finally moved to UK and he stayed in the UK for 105 years from 1815. And then he moved to United States. So it's still dates. United States is still the global reserve bank of the world. And there's a lot of speculation, there's a lot of article by Times, by Bloomberg, that the next 10 years, in fact, it will not even last for 5 years. US will not be the global reserve bank of the world in the next 5 years. Okay, so the next 10 years, the global reserve bank of the world will be digital currencies. You know why? Because now countries will no longer be pumping their money into different countries, pumping their money to particular countries again. They will be pumping it into creating their own coins. They'll be pumping it into funding maybe the universal coins. Like, for instance, now Bitcoin is the universal acceptable coins has actually entered mainstream, and there are alternative coins to it. So in the next 10 years, if it is not Bitcoin, there will be other coins that excuse me. In the next 10 years, either they fund their own coin or they would actually pump their money into already existing coin, which is like generally acceptable, just the way they pump their money to US dollars, which is generally acceptable and it's been there from 1920 till date. Okay, they didn't change. Okay, let's create our own currency, but no, they focused on US dollar. That's the way they're going to pump in their money into maybe a particular coin, or they're going to create their own coin. That's the future. Okay, we've analyzed it using Bloomberg analysis. I didn't want this class to be long. I would have just brought out all of that. And why is it going to leave US? Look at the times, what is happening in US right now. The unemployment rate is pumping high. There's a lot of borrowing of bonds, like the monies that was pumping to the country, that these monies are the ones actually being given out these monies are actually being received as bonds and debentures from different countries. Okay, so okay, come, we want to give you bonds, give us your money, we'll make profit on it, because everybody is taxed in this economy. No, high and mighty, no matter what level you are, the US economy will make sure they tax you. So it's stable at a way, it's stable at a particular level that no matter how much you give to us, we can give you back because the economy is productive and everybody's being taxed. Now, if you look at it now, if you look at what is happening now, there's unemployment, racism, there's a lot of bad news in the air, all right? And then it's making the value of the currency actually dropping, and sometimes paying back the bond that was borrowed from different countries. It's a challenge, right? It's a challenge because of the different indicators that are happening. Inflation is actually going up. You know, the economic policies that is happening there, it's actually going down gradually. It's not as strong as it was before. And that's why countries will now, instead of sending money to US, instead of borrowing money to US for them to, like, in forms of bonds and debentures, they will prefer to fund it on cryptocurrencies because they know cryptocurrency is the same everywhere. Okay, the value, it goes up instead. And you know, people actually put money into where their money will grow. If you put your money in a fixed deposit in a bank, let's use for instance Nigeria, put your money in Nigeria for fixed deposit, and then for 10 years, come back 10 years after, the value of interest that will be added to your money is actually as minimal as you can ever think, because there will be bank charges on it. There will be, you cannot even name the number of bank charges, because I did mutual funds for like 3 years while I was in Nigeria, and I knew when I'm getting the mutual funds, I'll be like, okay, the forms I will fill gives me, oh, your mutual funds is at the rate is like 15%, 12% annually. I was like, okay, that's fair enough. Before the year ends, it drops to 6%. So it's not even fixed. That's for the mutual funds. And the same way with the bonds. Okay, even if the bonds could be fixed initially, because it's just for a short period of time, just 3 months, the next 3 months, it won't be the same 10%. And if they give you for 12%, if you want to buy government bonds, so like you're borrowing your money to government for them to pay you back. So at this point now, the interest rate is first of all paid to you before the time even elapsed. Okay, so if you notice the bonds, okay, the bonds are actually within a short period of time. Like, I think I need to keep this down here. Nice. Within a short, just 3 months, so that if anything happens in the economy, they can pay you back your money comfortably, and the next one they'll increase, either they reduce the interest rates that you're expecting the government to pay, you know, for the next quarter. So that's how bad it is when you put your money in fixed income in your currency. You will see by the end of the period, the money you get is minimal to nothing. But if you put your money now into, I just showed you the Bitcoin, where we are now, the value, it's over 1,000,000% profit. You don't want to even go there. Like, I just use only Bitcoin. If you use other alternative coins like the Doggy coin, like the Ethereum, the BNB, the Binance, name them, you would actually see where it started and where it is currently. It's crazy. So if you pump your money into there, which a lot of companies are doing, we're going to look at it on the next slide. You'll see what is happening. Okay, so now what are global firms doing? What are they doing, and what is their aim? First of all, there was now an emergence of fintech firms. You know, there was no longer the traditional bank again with structures and everything. Fintech firms started emerging where there is no office. All they rely on is infrastructures, like digital infrastructures, network, and everything to actually function. It can just be in one office, and they are spread around the world. So if they invest more on virtual infrastructures, all right. And the reason these fintechs were birthed is because, you remember what I told you, how business owners cannot access funds, small, medium scale business, because there's a lot of barriers. There's a lot of what will I say? There's a lot of control around the money. So the money is actually given to only the big guys or the people who have a lot of capital, knowing that, you know, because they're actually analyzing their own risks. They're actually appraising their own risk. Can we get this money back? But the emergence of the fintech firms, these small firms, they came and they were able to fund small businesses, individuals, without so much capital. They took advantage of the credit cards and the debit cards. They know that you always have money, and the cashless economy will make it that you no longer carry cash about, but you always have money in your account. You get paid in your bank account, you get paid using the card, the electronic money. So they had to take advantage of that. The new fintech firm took advantage of that to give out facilities, credits to a lot of businesses, small businesses, individuals, knowing that was your paid salary, you will actually, this money can be deducted immediately from your account, okay? So in Nigeria, they use the, what's it called? What's it called? Oh, good. Is it NIN number or something? They use that to track you can have, what was it called? Is it, oh God, all the numbers in UK is not entering my head. Like there's a number that if you go to, what?
BVN number.
Yeah, BVN, exactly, BVN. So if you have a BVN number for a particular, it's one BVN for all your accounts. So the new fintech firms took advantage of the BVN, being that as the big banks were integrating BVN so that they can control all the accounts you have. They can know, okay, this person, you have 10 accounts or anything. Even the government is actually brought in the government so they can control taxes by business owners, because you can have so many accounts and you decide to only float one account for returns, for annual returns. You won't float everything. So they had to introduce the BVN so that if you have 10 accounts, once they click in your BVN, everything pops up. All right. So the new fintech firms took advantage of that solution to build their own, eliminating all the physical structures of the bank, but now reaching to the bankless, because the SMEs, the masses, they are really the bankless. So they had to focus on that, and they have made a lot of money from it. In fact, it became they had millions of users. It became a threat to even the big guys, and the big firms now decided to start integrating those services into their own service. Okay, let's talk about like their accounting firms where mortgage actually was birthed from. The big four, the PwC, the Deloitte, they were not actually servicing the small and medium scale businesses. They were focused on just the big guys, the large organizations, the large corporations, the public companies, the public test companies. Now, companies like Sage Accounting, QuickBooks, they decided to look at the accountless, the businesses that were not accounted for, and then they decided to build softwares that could service those sectors, and that's how Mortgage had to leverage on that to set up accounting systems for small and medium scale businesses. And you would actually see that once sectors are thriving, the economy thrives. Unlike the big guys who just employ just few people. Their employment rates, you can't compare it to the general populace, the general working populace. But the small, medium scale businesses, they employ like 46% of the general populace. Think about that. So they're the ones that are even supposed to be more stable. So either from the new fintech firms, which actually started looking at the bankless and the accountless, the big guys decided to start integrating it. All of a sudden, PwC, even Deloitte. I have a friend who works in Deloitte. She told me that, oh, we are now doing accounting for small, medium scale businesses, or we're now doing SME accounting. I'm like, wow, that's surprising. I didn't know you guys would come and be like, yeah, we are seeing it now, that the big guys are actually folding up because they will get a lot of debt in large quantity, and paying back will be a challenge. Okay, there would be a lot of challenge in their business, in every business. Okay, so and paying back those money because they get it in large mass of money, in capital. They will always open new companies, new subsidiaries, and sometimes they are hooked. And when they are hooked now, the banks will be running after them. And before you know, they declare bankruptcy, and there's no money to pay the bank anymore. So they decided to. It's like we have to consider these, accountless, because we're seeing that these people, once they are accountable, once they are bankable, they're always existing. They will always exist, because they are the ones that will serve people, because they are closer to the people than the top percentage, like the top big firms. Okay, so they started integrating the service, and now you can see that big firms now started integrating cryptocurrencies into their platforms. Okay, like Revolut. Revolut is a fintech firm. Revolut is a fintech company here in the UK. We have Monzo, we have Revolut, we have TransferWise. These are new fintech firms that we actually birthed to handle the services that, you know, the big guys were not handling, because the big guys said, no, I don't think we can go here. So they were handling like transfer, PayPal, you can name them. They were handling the services like inter-country transfer. You could transfer money from one country to another easily with just limited rates. And the big guys were not doing this. Before you transfer your money from Nigeria, maybe to UK, you have to, Western money also came, you know, you have to sign it before your money will get to you. It's crazy. It's crazy. But with the emergence of the new fintech firms, all you have to do is just download TransferWise, and then you've done your transfer. You've done your transfer. It's gone. Highest you pay maybe just £2 on it or £3. Very easy. Okay. And then these big guys saw that, oh, these new firms, they're actually, in fact, millions of people started going there because they were feeling a need that was very crucial to them. So the big firms now decided to start integrating the services too. Now you can do inter-country transfers from Barclays to GTB, you know, all of that, even if it comes to their own rates. So now with the digital currencies, the new fintech firms also, there were new firms actually emerged that focused on digital currencies. In fact, you can name them. They are like, you see the Coinbase, you see the BRD, you see the Spring Labs. You know, these are firms that just focused on purchasing and selling cryptocurrencies, all right? And they have, you can imagine how much Bitcoin went up, because we're actually at the initial growth stage of cryptocurrency. So if you put your money now, it will definitely go up. It will definitely go up. Even if it comes down and go up, you should know that life it fluctuates. Life is never static. You can't expect, okay, maybe this particular currency should be going up all through. No way. If it's just straight up, it shows it's dead. Anything that is lifeless it's just a straight line. Okay, even if you go to the hospital, I said as we started, if you're breathing, it to show that your life, the movement on the screen for the air must be up and down. Once it's straight, you're dead. So that's the same way it is with any economic indicators, any currency. You would always go up, go down. It shows that it is alive. Something is happening. So if a currency goes up, it's time to retrace and then go up again. So when it's retracing, to find out why it's retracing for a new momentum. Just like there's something we call catapult in my country. Like you want to like you put a stone and you want to, you know, hit it. Maybe you're trying to hit a bed or something, and then you drag it back. So you have to drag something back. When you release it, it now shoots again. That's how it is. When you release it, it shoots really, really up. So that's how, you know, in the finance world, it's something like it's retrenched, and then when it goes back up, it goes really high. So that's why the person who bought like 1,000 pieces of Bitcoin with just $100 and just left it to be like, oh, this money is not even going, oh, nothing, because it eventually came to the mainstream, which we are now, because that's initial growth stage, and eventually goes back to check his wallet if you can even remember his his password and all. You'll be like, what? How is the value of $100 now 68 million or something? How on earth? You know, you'll be wondering. But because it's actually left from the starting stage, pioneered into the mainstream, we're not at the top, just initial growth, okay? So, and now the good thing is that companies, countries, in fact, let's get to the next point. So now, as I said before, new fintech firms that emerged from just cryptocurrencies where, you know, the Coinbase, you know, just went public, where NAS is part of the founders. We have the BRD, we have the Salt, and all these people have a purpose for their businesses. There's one that Salt Lending, actually leveraging on cryptocurrencies for cash. There's a way their own mission is very interesting. You can read about it. Salt Lending. So we have the Coinbase, we have the Gemini, we have the BRD, we have the Netkey. In fact, Netkey actually focuses on cryptos for businesses. You know, they give You sell crypto for business. They don't do individual. So there are different segments of the market you can focus on and make a lot of money out of it, And then now what the big guys, now what are they doing? The ones who are trying to catch up, they are now integrating crypto into their companies. That's what they are doing because they know this is the future. They've done their own analysis. They've gone through Bloomberg, financial analysis. They've seen the way money is actually been evolving. That's the way it's going to evolve now. You can't stop. You can't stop technology. You really can't. It's either you join or do nothing. But you can never stop technology. You can never stop innovation. It will always hit you. So the big companies now, what did they do? They had to integrate. Now we have companies like Fidelity. Fidelity have integrated Bitcoin into their platform. Revolut integrated Bitcoin into their platform. And immediately, Revolut was actually into like transfer of it's also a new fintech firms without all the structures. And they were transferring money from one country to another, like they were also doing lending. Yeah, but they had, if you want to have flights, their platform was really easy. It's really easy. And this company has never been profitable. They're just raising funds, but they've never been profitable until when they integrated Bitcoin earlier this year into their platform. This company became profitable for the first time. So is it March, April, between those times? It became profitable for the first time just because integrated Bitcoin into their platform. You can now buy and trade Bitcoin, and of course they will charge you interest rates because we're at the initial growth stage of the new money. Okay, so IBM pumped in $200 million into the research of Bitcoin. So big companies now are now pumping in a lot of their reserve earnings into the cryptocurrency because they have seen it, they know it. It's just that a lot of people don't know what's happening. And that's why this class is now. So you can now see there's now a new one. Now, countries are now developing their own coin. And that is what recently happened when China trying to ban everyone from transacting with Bitcoin. Why? Because they are trying to float their own coin. In fact, they just floated it. Countries now are going to come up with their own coins, their own digital coins. In fact, UK just signed into parliament their own coin. It has not come to mainstream yet, but that is what they are doing. So countries who now want to develop, in fact, Facebook have their own coin and they introduced it into the market, UK market. It was banned. The reason why it was banned was because UK is coming up with their own coin and they want their own coin to be as valuable as Bitcoin as well. So like they're going to be competing with Bitcoin and they don't want any other coin to come because they're trying to float theirs. The future is digital currency. There's nothing you would tell me that is not from all the research and analysis I have done. The way the money has been evolving, that's the way to evolve. Okay. And then there are lots. You could just browse these new fintech firms focusing on cryptocurrency. You see beautiful companies. You see what they're doing. Amazed. The one that really got to me was the Netkey, which focuses crypto for businesses. It's amazing. Okay. So I think we should be asking now with all this information now, what are we going to do? What should we do? You learn from what the big guys are doing. That's it. You don't just fold your hands. If you're working a 9 to 5, try as much as possible to invest. Always invest your savings. Always invest. Make sure you have return earnings. That's how the world is controlled. Even the big businesses, they don't just finish all their money. They always have return earnings that they keep aside or they invest it. So it's always yield money for them. That's the way you actually live. If you eat all your money, you cannot eat all your money. You must always have money set aside for something that would yield more money for you, like investment. You could save it to a time, then you now invest it. Okay? So that's the beauty of money. That's when you can make money work for you. If not, you work all through your life. So how do you pivot your money to digital assets? You decide to buy a coin that maybe the value now is not so high, like the people who bought Bitcoin at 0.1, but you know that the market rate, the market cap of that coin is actually high. That's the number of usage, the availability is actually very high. You then go back to check, has this coin even grown? When did it start? Where it is now? Has the value gone up? You could buy into those coins, like just save your money there. But make sure that if you're buying into any coin, just as you're putting your money into a digital asset, make sure that it's something that you are sure is going to be a centrally accepted coin in the near future. You check the people who are behind it, you check the purpose of the coin, you check the history like that before you pump your money to any digital asset if you want to take part of the new financial boom. Okay, so other people you could put in digital currencies as part of your savings. You know, as you're working and they give you and you have savings every month, instead of just putting it in the bank, you can decide, okay, I'm put 70% to fund this particular coin, or I put this amount to fund this. I put this amount to as part of my savings. So imagine someone that will put in savings 100K every month, beginning from the year maybe 2015. Let's not even go to 2009. Imagine the value of the person's money today. From what we analyze, it's crazy. Okay, so finally, please get involved with cryptocurrency. The world has gotten it. It just that sadly it's been banned in Nigeria for some, government reasons. I don't know why we're always behind. Here, everywhere is in some stores you can pay with Bitcoin. I mean, physical stores, not online stores. You go to a physical store, you pay with Bitcoin and you move, because the country embraces technology, it embraces change, it embraces innovation. Here, like when you're trading or doing anything Bitcoin, you are doing it from your card. You hardly hear of peer-to-peer lending in UK, in all these big countries, because they've integrated their banking system with it, right? Because even the banks are trying to find a way to integrate cryptos into their services. So they have embraced technology financially because they know where the money is going and they know where we are at the moment. So they are looking for how now, once it goes to when it goes to the maturity stage, there will be a lot of checks and balance control regulations on it, because everybody will be fighting for their own coin to actually be as high as Bitcoin. You'll find a way to devalue Bitcoin at every possible time and then pump theirs to be at the same level. So now there will not be a lot of regulation, and you cannot even buy as much coin that right now you can buy because of the regulations. Because now there's something in real estate. Say if something is happening somewhere, go in front, buy it, and wait for the people. When they come, you sell it to them. So the people who bought a lot of Bitcoins, a lot of all these coins at initial stage, they're the ones that will sell it, because you can't really reprint these coins. They're the ones that will sell it. So whenever you imagine the person who had 1,000 units, they're the ones that would say, okay, no, I want to sell mine to 8,000. I want to sell mine, and wait for the market to go back up, because the market always come down, retrace based on the economic indicators that is happening, and to always pump back because of the stage that we are in now. So the main thing is for you to understand where we are in now, to know how to take advantage. Don't go when it is already at maturity stage and it's now diminishing. Don't go there to go and no, that's not how things are done. Okay, so I think this class will be ending here. We would always have more classes, and I really, 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 really hope that we. Oh, there's been a lot of chats. Oh, okay, the BVN. Okay, the net key. Okay, to everyone, company is net key. Yeah. So there will always be facts. My friends, my lecturers here, they want to be part of this training, and there will always be more to come. There will always be more to come. I think by next week we'll have something, new knowledge, new awareness, new exposure to what is happening. And finance is like, I think your life really revolves around finance. If you can get to finance right and you make the best decision for yourself, especially my friend that came with his son, and your son is learning all that is happening now, your son could be the next, financial giant. You never know. So I hope this time was worth it for everyone. And I hope to see you all next time that we're having something like this. Okay, so I think I'll stop the share now. Yeah, I'm seeing everyone that joined. Oh, interesting. Interesting. Thank you so much. Thank you. Thank you, everybody, for joining. Yes, I'm seeing everyone now. I have a lot of messages on my WhatsApp. People say they can't join one issue or the other. Like, I don't know. I think I'll address them the next time. Thank you all so much. I'm going to the chat now. Right. Okay. A physical class in London. Yes, we're getting there. We're getting there very soon, very soon. London just got yeah, there's a recording. I think I'll post it on YouTube, so you can always go there and see it. Thank you all so much. Thank you all so much. I was trying so hard to work with the time because it was scheduled. Okay, okay. So I've seen all that we're able to join today. I think I'm going to. I don't know what to do for those who couldn't join. They're sending me lots of messages. I don't know. I don't know. I don't know what to do. I don't know how to do it. Which platform I should use for our next session. Thank you all. Thank you all. Thank you all. The person asking for my contact. I have to. Oh, people. It's now people are coming. Oh no. Oh no. I don't know what to do to you guys. So I don't know. Maybe we would always, there were always the challenges and their solutions. That's a beautiful thing about life. We always find solutions. Okay. I'm dropping my number here, my WhatsApp number. So let me add, what's it called? Plus